morning, everyone. Today is April 16th, what would normally, in case you don't know what day it is, like most people, they're starting to be a blur. Typically, you wouldn't get Marina Parkin, the infamous Marina Parkin CPA, on a day like today because she'd be holed up in respite mode, recovering from a long tax season. But this marathon tax season, unfortunately, is going to continue. So, thank you again for joining us. I'm Joanne Coons. I'm here today with Marina Parkin, doing as we promised to continue to bring the most recent developments. The SBA has dropped late the night before last additional guidance on the PPP program. So that's what we're here today to give you more information about. And it's quite extensive. We've received changes, an about face, if you will, on some of the calculation of how the loan amount will be determined. And we've also finally gotten some guidance on the debt forgiveness. So more to come on that. We'll get to that at the end of today's webinar. As always, these webinars are recorded. They will be distributed to you automatically for attending. If you are watching a recorded version of this webinar, you can see the balance of our webinars available on our website, coonsassociates.com, and also on our YouTube and Facebook pages as well. So that being said, let's get started. Today we're going to be talking about PPP and the EIDL Updates. So Marina, give us a little bit about what's jumped off here over the last 24 to 30 hours.
Yeah, this is this update. I wish it would have come last week when they were getting ready to accept the applications for those self-employed and independent contractors. But I have a feeling that this guidance probably came as a result of them starting to look at those applications that started to come in last Friday to them. For people who were, employers and had businesses and had employees, the requirements were maybe not 100% clear, but they were fairly straightforward, that you use your payroll reports and you do the calculation and all that stuff. However, when it came to self-employed people, independent contractors, single member LLCs, etc., that was kind of great from the beginning. So people sort of did whatever they thought was right. We read through it. Other professionals read through it. We have listened to continuing education from other professionals interpreting it. And at that point, everybody was sort of in agreement that we were using gross income from, let's say, commission. So many of these independent contractors were 1099 people, and we said, please use your 1099. And that was the advice we've gotten from other professionals, etc. Well, this guidance that SBA has dropped on our head Tuesday night clarifies exactly what amounts you should be using as a self-employed individual. So I am going to break the concept of self-employed or independent contractor in how you file a tax return. Mm-hmm. So let's start with those people that are on Schedule C. Schedule C is a schedule of profit or loss from business that is a part of your normal individual tax return, Form 1040, and it reports your net income, your gross revenue from your business, and the business expenses to come to net income. When you get to that net income, it goes to calculate your income tax as well as your Social Security and Medicare tax, i.e. self-employment tax. What SBA is pushing here is that since this is a paycheck protection program, they would like to give you help on the amount that you pay payroll tax on. Not your gross commission, but the actual net income from your business that you end up subjecting to payroll taxes. So essentially putting you on the same footing as an employee. So when we've got Schedule C, and you get down to net income, and I think Joanna is going to try and pull up maybe a Schedule C on the screen to show us.
Can you see that?
I still just see our presentation slides.
Oh, I have to go back and reshare it. Mm-hmm. Hang on.
Okay, no worries.
Our user error.
Yeah. Learning the technology along with the SBA guidelines.
Forget that.
Right? This is insane.
One thing at a time. Here we go. This form should
So
look
here you
familiar
go.
to our Schedule C filers.
Yep, our Schedule C people see this in their returns all the time. So you get down to line 31. See line 31 at the very bottom that says net profit or loss. That is going to be the line that you use in the PPP application, in the line where it says your payroll. So you take line 31, divide that by 12 to get your average monthly payroll, and then it gets you to times it 2.5, and then you get to your loan, proposed loan amount. This is going to be limited to 100,000. So again, what's getting limited to 100,000 here is not your gross commission, is going to be the net income. What they're calling it for Schedule C filers is owner replacement, owner compensation replacement. So essentially, as the owner, independent contractor, self-employed, this, if you were going to work for somebody else, for example, this would be your salary. It wouldn't be the gross, and then you still have to pay expenses. You would essentially take home whatever is on line 31. And that's what you're paying payroll tax on. So this is, in their mind, putting you again on equal footing to an employee. Okay? So we want to use line 31. Now, if you don't have any other employees in your business, that's the line that you're using. If you also have other employees, their wages are on line 26. See line 26 where it says wages. That's if you pay wages to other people. You may have some assistants that are on wages, etc. You can also add these wages in addition to your net income to ask for this PPP loan in your formula, because you would still be continuing again to pay these people. And again, back to you, once you get the loan for 8 weeks, you can fire them. You have to keep their salary. Don't cut their salary more than 25%. And we'll get to forgiveness here in a little bit. But the key is, if you have wages, you use wages for other people, plus your net income on line 31 to calculate the loan. If you're just the one man band, you're using line 31 and you're calculating the your payroll essentially there. From what we can read from this particular guidance, you as the self-employed person cannot add your health insurance and your contribution to a pension plan as part of the request for the loan or as part of the compensation. But if you have other people on wages and you pay for their health insurance and you pay for their pension plan, then that can all get added. Again, that may come later, but for the purposes of this big picture, SBA is trying to tell people, no, don't use gross, use net. So this is very important. Now, what are they requiring when you do submit this SBA application? They don't need your tax return. They just need the Schedule C. The Schedule C also doesn't have to be final. They're not trying to police you and say, this has to tie exactly to how you're going to file your 19 return. Many people, and this is the reason why they've extended everything to July, many people are nowhere near putting their tax stuff together. For those of my clients, for example, that we have already filed and you've got Schedule C, you've got it. For those that are in progress, please email me and we can get you a draft. It may not have gone through a final review, but this will be good enough to use to submit. So again, not a full tax return. You need Schedule C. It doesn't have to be final. It can be in a draft form. As long as you show them the number that you got to the net income. And again, if you are, let's say you're a realtor with fairly high commission income, let's say your commission income is 250, you had maybe 100,000 of expenses, you're going to end up with net income of 150. You're still going to be only limited to 100,000 net income to calculate your loan. We've gone through this basic math, but if you're 100,000 max, then 100,000 divided by 12 times 2.5 gets us about 20,000 of the loan that you're requesting. Now, if you have not employees, but you yourself have subcontractors, let's say you've got other independent contractors that assistants or whatnot, that stays the same. They have to use their own 1099 and their own Schedule C to apply for PPP loan. You would have deducted their expense to get to your net income. And again, all the deductions you're using to come up with that net income, they're all legitimate deduction to get you to the number on which you're paying payroll tax. So This is really the key here, is getting down to that bottom net income number on which you're gonna pay Social Security and Medicare tax. That is what's considered your owner compensation replacement. So that's key here, guys, okay? So if there's questions on that, we can cover, and then I'd like to move to my S-Corp people.
Before we move off of this, one question we've gotten a lot over the last several days has been with respect to the NAICS code. That code you can find on your tax return forms, and while we have the Schedule C form up, can you tell us what to be looking for?
You're gonna look in box B.
Right here?
And yeah, enter the code. For my clients where this is already populated, it's gonna be in there.
Yep.
So
And if
when
you have, it should be on even prior returns, even if we aren't the preparer. So that's where you're going to go. You don't want to just look that code up now. You need to be using the one that matches the tax return.
Yeah, absolutely.
Okay.
Now, I also would like to mention that, you know, if you remember, we mentioned that in you don't have to necessarily have been in business for 2019. All you have to do is be in business before February 15th of 2020. We are not quite sure exactly what to do there. Those people don't have 2019 Schedule C. So there has really not been any guidance on the people that have not been in business prior to February 15th if you're later than 2019. I would imagine it's going to be maybe a draft Schedule C, or at least something to get you to that net income number. But it certainly is fairly clear what they're trying to clarify is people who have been in business in 2019 that are applying. And again, I think this is coming as a result of them starting to look at these applications. You know, we went over last week the application with you guys, and you know, are you an S-Corp, are you LLC, who are you self-employed independent contractor? I think this is narrowing it down a little bit more on the type of form you're filing and how you're calculating your net income subject to payroll tax. That's the key here. So you can be an LLC and be on Schedule C. You can be independent contractor where all the income is to your name. They're not looking here on whether your business is legally separate from your personal or whatnot. They're just looking at how it is that you are filing and reporting and paying that payroll tax here. Okay, so if you are a single member LLC and you're filing Schedule C because the single member LLC is disregarded entity, you'll still have a business name, which most of the time it's here you can see on line C. But if you're just, again, one-man show that you've never formed an LLC, you're just operating as an independent contractor, everything to your name, it's just going to be, you see your name of proprietor on the very top line and your Social Security. You still have your business description, and then you still have your code. So I would complete all of that. So if you don't have a separate LLC, you are going to leave line C and line D blank. But if you do have an LLC that you formed, and even if it's a disregarded single member LLC, I would most certainly fill out line C with that business name and the EIN number. So let's say you're a realtor, you've got your PLLC, you're not a separate corporation yet. You may be a name, you may be Joanne Coons, then you're going to be Joanne Coons PLLC with an EIN number. Since you're also not submitting the full-blown tax return, I would also put the address on line E as well, even though it may be the same address as on the first page of your tax return. I would just fill this out as much as I can. Line F, accounting method, most of you, 99.9% of you are going to be cash. So please mark that. Did you materially participate in the operation of the business? Say yes. If you started or acquired this business, again, if this is a brand new Schedule C for you, a brand new business for you, click yes on line H. Did you make any payments and that would require you to file Form 1099? That's if you had independent contractors that you filed 1099 for. This is not you receiving 1099. This is you having subs that you would have filed. If you didn't have anybody, mark no. And then, you know, again, what they're doing here, this is not SBA, this is IRS. So what they're doing here is trying to make sure that they match. If you've issued a 1099, they're looking that the other people received it and put that in their income. So this is what, this is fairly basic. You know, it gets you through your gross revenue, cost of goods sold. If you're a service business, you know, you're my realtor guy, you don't have cost of goods sold here. Your gross receipts is your gross profit. You know, you're not a manufacturing, you're not a wholesaler or reseller or anything like that. So the income, most of you will just have line 1 populated, and then that'll get you down to line 5. The list of expenses here, this is kind of a basic form. Again, many of you are familiar with this form. You've been my clients. This shouldn't be new for many of you. It's got basic, common, typical expenses that a small business has. You may call it something else, but if it fits into this particular, you know, description, put it in there. Like, for example, office expense, does the instruction, well, it could be your, you know, supplies, although there's a separate supplies. It could be just general, you know, dues, and could be the rent of the equipment if you're not putting it elsewhere. So it's kind of a catch-all general category. So I think you got to do just the best that you can here. If you're not categorizing it right, again, this is not SBA is not coming to police you that you're taking the deductions in a proper line. Even IRS honestly doesn't care. So as long as you've got them categorized in a logical form, that's the most important thing. So most people are trying to maximize these here to get down to the smaller bottom line net income to get you minimum tax. So when you've got, now there's a line 27A that says other expenses from line 48. What that means is there's another form just expanded on other expenses where you can list in detail other expenses that may not be listed here that apply to you. And that's where you would put that. You get to your total on line 28, and then you get to the net income here. Notice the home office use is on line 30, and the reason for that is if you get down to net loss, you cannot deduct your home office expense, and you can still show it there, but it's going to be carried over to future years when you do have income. So that's why the home office is pulled out as a separate line item for Schedule C people. Then you get down to net profit, line 31, and the line 32, that's really for you if you have a loss. Now, if you get down to this and you have a loss, don't apply for PPP. So
Wrong.
PPP is not for you. So again, I said that what they're trying to do is get you that owner compensation replacement. So if you get down to net loss, there is really no compensation to replace. So this is really for people that are getting down to that net income on which they're going to pay their payroll taxes, and that's what you're going to use as the basis to calculate the average monthly payroll times 2.5. So the line 31. Okay.
Perfect.
So yeah, let me know, guys. Like I said, if you're my client and your tax return is in progress, you know, don't freak out. Shoot me an email, send Lainey an email. We'll get you a draft of Schedule C if you're in Schedule C, and you can certainly use that for your application.
Now, Marina, if somebody that's listening is not your client and or hasn't provided their information, so they're not near a draft, would you recommend that they just pop onto this irs.gov website and complete the schedule themselves?
Absolutely, absolutely. Again, you're not trying to be accurate here. You're not trying to capture all your possible expenses. Exactly. This is really to get as good of a picture as you can at this point to get down to your net income. Many people would like to be a little bit more conservative here because, again, you want to get the bigger loan, so you may be trying to get less deductions. However, we don't know at which point the real Schedule C may come up in this. And at the same time, when we get down to the forgiveness part, you know, again, if you showed too many expenses that may not be the compensation related, that part of the loan may not get forgiven. So here I would try to not minimize it, not maximize it, but really try to get as close of an accurate picture to your 2019 small business income as you possibly can. Okay, and then this form, if you go to irs.gov and you click on forms and you just click Schedule C, just this will come up. And I believe if you can save it, it's going to be, you can auto fill PDF and such.
Yeah, this is a fillable PDF form, so you can enter your numbers in here as you see. One thing I did see in the regulations was that the actual filed Schedule C, what you actually end up submitting to the IRS, is what's going to be used when it comes time for the debt forgiveness. So you can use it to get a bigger loan now, but if you don't ultimately stick with those numbers or something close to that, that's what's going to have an impact on your portion of your PPP loan that you obtain that will ultimately be forgiven. We will provide a copy of this link when we submit you the copy of this recording, and it will also be posted on our website. So that way, if you need to access that, when you go to kunzassociates.com, you click on COVID-19 resources, you'll see today's webinar, and this link will be associated with that. So you don't have to look for it on the IRS website if you aren't comfortable. The other thing I want to mention is in the SBA mentioned that they would be issuing additional guidance on how, if you were a new business in 2020, that's going to be handled. So if you were not operating in 2019, but you were operating prior to February 15th, we don't know, because there isn't going to be, you aren't going to be able to use this form Schedule C for 2019 because you didn't exist in 2019, but they haven't given us that guidance yet. We expect that to be forthcoming. That being said, last night I read a Wall Street Journal article that suggested that the SBA had approved 324 billion of the 349 billion of funds allocated for the PPP program. Pressures are increasing. Both Democrats and Republicans have lobbied for the additional $250 billion funding. Both are in support. They're just arguing over how this is, whether or not more restrictions are going to be placed. That seems to be the holdup. It doesn't seem, from what we're seeing, that there's any concern that that additional funds will not be allocated. The question is when and under what rules. So submit as quickly as practical so that you can hopefully, the longer this goes, as you see how many times you see us on these webinars, the more and more rules and restrictions are coming out. So just stay tuned, and the quicker you can get in, the more generous or more favorable your outcome seems like it's going to be. That being said, you need to have good, accurate numbers, so it's better to submit once you've got all of your information rather than just throw it at the wall like spaghetti, because you may be disappointed on the back end.
Well, and put this in perspective, guys. If you are a self-employed individual and it's just you may have some subcontractors or something else here, you're on Schedule C. Likely your profit is not going to, even if it's in excess of 100,000, you're still going to be limited to 100,000. So whichever way then these numbers play out, like in the example I gave you, let's say you're a realtor, you've got gross commission 250, you have 100,000 of expenses, whatever those expenses may be, you get down to net income of 150. You're still going to be limited to 100,000 on the Schedule C. So again, I wouldn't try to make this super perfect if you're in those numbers. If you're going to get maxed out at 100,000 anyway, then submit the draft and submit the application. At 100,000, the loan you're getting is about 20 grand based on the math. So, you know, instead of going crazy about this, think of that 20 grand loan as a perspective that, you know, don't go now and sift through all your credit card statements if you haven't done that yet for, you know, to submit to your CPA. But if you think that with your net income, or even based on how you were last year in 18, if 19 is about the same, if you're going to get maxed out at 100,000 anyway, complete this to the best of your abilities. And just know that when you're going to fill out that SBA 7A application, you're going to still be maxed to the 100,000. So I think perspective here for the self-employed is key. Okay.
Perfect. Thanks, Marina. You want to flip over to the S Corps now?
I do.
You want me to pull that return up?
Well, you can. I think, yes, let's do that. Again, we don't have to submit it. So let me also go to those people who have gone from Schedule C to electing their entities to be treated as S corporation for tax. We have a lot of those small businesses, and a lot of them are owner-employee businesses. Again, if you are a commission person and you are an S Corp, we always understood it that you can still use your gross commission as the basis for the loan. However, this further guidance from SBA also told us that no, you should really be using the W-2 wages that you pay yourself as the employee. So again, you're not using your gross commission, you are truly using just your payroll. So again, putting you on equal footing to other employees, because it's only on your payroll that you're paying the payroll tax. And that's what they're trying to replace, is your paycheck that is subject to payroll tax. So the whole concept of S Corp, and many of you that are my clients, you get this, is that we're trying to minimize the amount of payroll tax that you pay by putting you in the S Corp structure from Schedule C, so that you're not paying Social Security and Medicare on the net income of your S corporation, but only on the reasonable compensation that you've paid yourself. The concept of reasonable compensation has always been great, and we've talked about this for years, and so has IRS. The reasonable compensation does not need to be 100%, but it needs to be reasonable. So if you hired somebody to help you with the business, if you went to work somewhere else, what is it as a percentage of gross profit, et cetera, et cetera. So many of you that are in the service industry, again, back to a realtor example, that's a great example. Many of you are taking about 30% of the gross as compensation. So let's say you are, 300,000 gross commission, your paycheck that you pay yourself, salary, the W-2 is 100,000. That's going to be the basis for your loan. Okay, so it is going to be your W-2 that you take as the owner employee that is going to be used as your basis. Also, if you have other employees, like you may have other admin people that are on payroll, et cetera, you're using the total amount of payroll. So your payroll plus your other people's payroll, that's going to be the payroll cost that you're using. So you, again, if you're an S Corp guy, you're not submitting your S Corp return. You're just submitting your payroll forms, your Form 940, your Form W-2, W-3. I would just have that whole package ready for when you're submitting the loan, and the total payroll is what's used to calculate the basis of your loan, with each employee maxed out at 100,000. So if your payroll is, let's say, 120, let's say you're $500,000 gross revenue, your payroll as the employee is 120, your payroll is going to be limited to 100. You may have an office person at 40, so now you've got 140,000 of office payroll to use as basis for the loan. So you take that 140, divide by 12 times 2.5. That's what goes on that SBA 7A application. So again, you're not submitting the tax return. None of my clients who've submitted for this loan and got the money have submitted the tax return. I know some people are in a tizzy emailing me, I need a copy of my return. You do not. If you're an S Corp guy and you've got payroll, all you're going to need to submit is copies of your payroll. If you also pay pension contribution as the employer, those pension contributions are also part of the payroll costs that you're asking, as well as any other benefits that you're paying. So those will also, if you're making pension contribution, you will have a statement from your pension account showing how much contributions you've made or are making for this year. You can add that on to your formula for the loan. So this is fairly straightforward. So we went back and forth with a lot of our clients who initially may have applied using their W-2. Then we understood that we need to be using gross. Then they wanted to go back and amend the application form. I don't think they could, or they didn't get to that point yet. So for those of you that were still in that gray area between gross or wages, I'm here to tell you that according to the guidance issued Tuesday night, you are using your W-2 wages as the shareholder employee. So that's key. Okay, if it's you and your wife, you're using all the wages. It doesn't matter who's on there. Again, you're not using what you're paying to subcontractors. They will have to take their 1099, prepare their own Schedule C, and submit that for their own PPP application. You are basing yours on payroll because you are paying payroll tax on that amount. So that's key. Now, questions before we move on to a third funky thing. You're muted, Joanne, you're muted.
Sorry. I was trying to eliminate background noise. The only question so far, and I think this is where you're headed next, is what if you haven't started the paycheck yet and you are just taking distributions? How are we going to treat those S Corp guys who don't yet run a payroll?
Yeah. So this is going to be, this is my next thing that I sort of wanted to tackle. And so if you guys are my clients, we've talked about this several times where once you're an S Corp, you really do need to do payroll. What we have done with our clients in the past is in lieu of putting them on W-2 wages, particularly in cases where their income was volatile. Again, a realtor is a great example where you don't know what year, how your year is going to go. So you don't know what you're going to look like at the end of the year, and you have no idea how much of payroll is reasonable. So for those folks, oftentimes what we did is when we got to the end and we were looking at the real numbers as we worked on tax return, we gave them what we call management fee. So essentially, instead of paying them a paycheck, we showed on the tax return that we're paying, that the S Corp is paying the owner management fee, essentially for managing this business. Same thing as a W-2 would be. You're paying W-2 to manage the business. We're giving you management fee. What that management fee was, it was not shown on W-2 because we had not done anything quarterly, but it was a way for us to show IRS that we're complying with the requirement that we're paying some payroll tax on reasonable compensation. I did not have any of my clients on the S Corp structure where I didn't give them a management fee unless it was specific circumstances where it was not necessary. And I'm not going to get into it now. But again, let's say you're a self-employed guy, you've done an S Corp election, now we're putting your revenue in here, we're putting your expenses here, you have not set up payroll yet, we've shown management fee to you. Here's what I think we should do there. With this management fee amount, we can throw that management fee on Schedule C. Back to our very first slide. We will not have any expenses because that's already what we've determined your payroll or reasonable compensation to be from your S Corp. So we would say if we gave you management fee of 50 grand, we'll give you a Schedule C with that 50 grand in the gross line, no expenses, 50 grand in the next line, so that instead of having a W-2 for that 50 grand, you're going to have Schedule C for that 50 grand. And that's the Schedule C that you're going to go and use in the PPP application as the basis for the loan. This is the best that I can think of for my guys that have not yet moved to a W-2 structure. So again, management fee, let's throw that on Schedule C, the top line, no expenses against it, get that number down to bottom line 31, use that as basis for the loan.
You're going to do that even for folks who maybe this is their first year, 2019 is their first year on the S Corp return and they did not take a payroll, they will
Correct.
have an opportunity to run
Absolutely.
that management fee for 2019.
Absolutely.
Perfect.
Absolutely. And if you guys are my clients, if my clients are on here and your S Corp return may be in progress and you haven't done payroll and we haven't gotten to the point where we're looking at this management fee yet, please shoot me an email. I can have one of my CPAs put a Schedule C quickly together for you so you can use that on your application. Again, the way that I look at what is reasonable compensation for management fee purpose, we'll start with the gross revenue, we'll look at what else you may have had, and then we'll take a percentage. As you know, most of my realtor clients that are on the S Corp, their compensation is about 25 to 30%, which has always been deemed reasonable by IRS. IRS is always coming up with more guidelines. I spoke to our other attorney, Jackie, yesterday, and she was reading reasonable compensation guidelines with the magnifying glass and was suggesting as to what that should be. I think at this point, we've kind of stuck to about a third of your gross being reasonable compensation, and with that, we can most certainly do it. Again, let's go back to the numbers and look at it in perspective. if your reasonable compensation portion, which is, let's say, a third of your gross commission, is 100,000 or more, you're going to be maxed at 100,000. Okay, but let's say your whole income was 150, and your reasonable compensation based on that number is 50. It's about a third, right? So we're going to give you management fee, or even if it's a W-2, it's going to be 50 grand. If you're looking at 50 grand, divide by 12 times 2.5, you're really asking for about $10,000 in this PPP loan. Still worth applying. I wouldn't throw that away or leave that on the table, but you know, think of it in perspective of what your numbers were last year. I want to mention too that I've talked to my clients that have fairly high payroll in terms of number of employees. You know, we have a manufacturing client. I spoke yesterday to a restaurant client. And you know, their friends are in the same position. A lot of the businesses that have a lot of employees have already gotten the money, because I think the key with this loan was to fund those businesses and their payroll needs for the 2 months period to keep those people in there. So I feel like that is the SBA target now, is to keep as many of those people employed. I think that these self-employed individuals where, now your net income is 50 grand, sure, you can apply for, the loan or smaller amount, but you are probably not as much of a priority in sequence as would be, let's say, a restaurant that employs 50 people.
And that's evidenced by the delay in allowing people, requiring the self-employeds and independent contractors to wait a week after the program opened to submit an application. So
yeah,
frustrating.
And if we're looking, absolutely, and if we're looking again at this guidance that came out, it does make sense to me on that intuitive level where, again, we're trying to replace your paycheck as an independent contractor. If you've gone through this tax saving opportunities and have set up an S corp for yourself to save on the payroll tax, of course your paycheck is going to be lower. So that paycheck replacement piece, the Paycheck Protection Program, is giving you only a little bit, versus giving this big operating business with 200-300 employees something to keep these employees off the streets or out of the unemployment office. So just keep this in perspective when you guys are putting these numbers together. Just remember, you're limited to 100,000 of that net compensation number. Okay.
Wow.
It's been interesting, and I am sure we'll get fielded more with emails, but like I said, for those of you guys that are my clients, if I'm working on your tax return, if there's some non-clients on this call that are working with other CPAs, and most CPAs are in exactly the same boat as us. A lot of the actual tax work has been stalled because we have been, knee deep and eye deep in this in these provisions. So everything else has been moving very slowly. But if we can throw together a draft, at least of the Schedule C, or give you the Schedule C for management fee, you should be in good shape to apply, submit the application. For those of you that have already been on payroll, like I said, you don't even need your tax return. Your payroll has already been done for 2019. You already have your 940, 941, W-2 and W-3 from the payroll person, so you can submit that. But if we need to throw together a draft Schedule C for you, please reach out. I'm happy to help as much as possible. So please be patient with us and your other CPAs, because we talk to a lot of different CPAs and a lot of different firms, and everybody seems to be in the same boat. So please be patient with everybody.
If you guys think you are feeling stressed and overwhelmed and confused, don't let it get you down. I was talking to Jackie and Marina yesterday after the guidance came out, and I said, I've read this particular provision, no kidding, 15 times. And we were debating about how to interpret a particular section. The guidance was like 29 pages long. And I was like, after the first time I read it, I was like, okay, well, I only read it once, so I get why I didn't understand that. I had to read it again. But after the 15th time, I was just mad. Like, that still doesn't make any sense. I don't know what they're trying to say. Now I need guidance to the guidance. So as someone who's been doing this for 20 years, it's not easy to read. It's not easy to navigate. And certainly when this is a foreign language to you, it's even worse. So one question that did come up, Marina, is do we still have to provide the draft Schedule C if we run a payroll?
No, you do not.
Yeah. But what about if you're running payroll for other folks and not yourself?
Then you're submitting those payroll and the Schedule C for that net income as your owner compensation replacement piece.
Gotcha.
Okay.
Perfect.
Mm-hmm.
All right. Do you want to flip over to EIDL?
Yes.
Do you
want to cover the EIDL, that 10,000 versus the 15,000? Why don't you mention that and see if that makes much sense?
It's perfect sense, right? Let me get into my from current slide. Mm-hmm. Look at this. Boom. And now I've become a technology guru on top of tax.
You're going to learn. Like our kids have to learn.
Cracking up laughing. Like this, if this is technology guru, I don't want to see it.
You know, it's the kids that are doing online schooling now that are going to be true technology gurus.
God, you're 7 years old at home so you can run your computer.
That's right.
So some other changes that have happened since the last time we all chatted were with respect to the EIDL loan, or the Economic Injury Disaster Loan. One thing that we had been advising folks, because it was accurate up until this past Monday, which was April 13th, the SBA was who you were applying through the EIDL program for. The EIDL loan is not forgivable like the PPP loan, but it did have a component which had debt forgiveness, which was a $10,000 maximum emergency grant. The SBA's position initially was, no matter what, if you applied for the $10,000 emergency grant, that would be released to you, even if the balance of your EIDL loan application was ultimately denied. Now, they have come back and revised that due to the exhaustion of funds and how quickly the funds went. They came back and said, you know what, guys, we're not going to give everybody $10,000 right out of the hat, right off the bat, immediately. We are going to now change that and give you $1,000 per head count in the employees. So if you are sole proprietor, independent contractor, realtor, Mary Kay consultant, whatever your story is, and you're by yourself, you are one, you count as the employee and you get 1,000. If you have 3 employees, you get 3,000. This does not mean you will not ultimately get more money under the EIDL loan program. This is limited strictly to the emergency grant funds that were immediately being released. And I say immediately, this is government immediately. It's like football minutes. So immediately means a couple of weeks, apparently. We have had several clients who have now come back and said since Monday they did get their $1,000 or $3,000 or whatever the number was from their emergency grant. I don't know about you, Marina. I hadn't run into any of our clients who had gotten money prior to Monday under EIDL.
Nobody.
Okay.
And nobody that I know that have gotten the 10,000 that was promised before.
Gotcha. We have had plenty of clients who have been fully funded and received the funds in the PPP program, but I've just started hearing of folks getting, and the PPP funds that I have seen come were folks who applied as soon as it opened. So that money also came in this week. So I haven't heard of anybody actually having money in hand prior to Monday, April 13th. Mm-hmm. Now, this is our limited anecdotal client base. This is not the whole world. I've certainly read articles where people said they had it, but it wasn't our personal experience. Now, another question that keeps coming up with respect to both PPP and EIDL, plenty of people have said, hey, look, I applied right away and now the game has changed. So how do I amend my application? How do I make it right? We have not yet seen any bank come back and say, okay, shore this up, change this, do this. The only experience that I have seen with a client having any opportunity to make a revision was I had one client who submitted to the penny, and the bank actually emailed the client and said, you need to round this off with whole dollar amounts. did that, immediately got the approval, and the money came 2 days later from PPP loan. So if you say, oh, I calculated my total loan amount under PPP incorrectly, or I submitted my EIDL and I only put 1 employee and now I see I should have put 3, I don't have any guidance on how we could possibly amend that. I definitely would not file a separate second application. But we just haven't seen, the banks are having a difficult enough time getting the initial application filed. I haven't personally seen any opportunity to go back and make any revisions once the submission has been entered. Yesterday on our webinar, we did a line-by-line analysis of the EIDL application itself. When you get to the end of the EIDL application, there is a review button you can click to review the whole thing before you submit, and then you can make changes. But I am unaware of an ability to amend the application once it's physically been submitted to the SBA.
I would also like to highlight this 10,000 piece here. So this is the first time that we're hearing the $10,000 advance being tied to employee.
Yeah.
This is why this has always been an advice, and not just ours, but everybody, is that if you've got a business that's not employee based, like your real estate portfolio, then you will still be eligible for this $10,000 grant that's going to be forgivable while they're reviewing your EIDL application. However, if you don't have any employees, I am not sure you're going to get this $10,000 full advance now under this new guidance that was issued on Monday. So for those people that have applied, now EIDL is still fantastic because you can still apply for other uses of funds other than PPP. You can still apply for some payroll that PPP may not cover. You can apply for it's your working capital loan. That's what you're applying. So, but this 10,000 grant being limited to $1,000 per employee this is the first time that this has come up. So I think that if you are not going to be an employee heavy business and you may get, let's say 1 or 2, if you are the employee or whatnot, you'll get that $1,000. I think that's what's going to be forgivable, not the $10,000 of the loan that you may ultimately get. And I think this is where there's probably going to be a little bit more information about it, but I don't know, Joanne, if you're reading it the same way, but this is how I'm reading it, is that you're not just going to get everybody automatically $10,000. It's going to be tied to the payroll people, and if you don't have 10 employees and you have 1 or 2, you'll get that forgivable grant of 1 or 2,000, and everything else will just be a regular EIDL loan that you will have to pay back. That's how I am interpreting that particular thing, if you agree with me.
Yeah, and it's frustrating again because they didn't start out that way. And what I did end up reading was articles just suggesting that it was just meant to curtail how fast the money was going. Both programs are nearly exhausted. As I mentioned earlier, there was $324 billion of the PPP already allocated. That is supposed to be replenished, but if that's the case, then they should run out of money today, Thursday. The Florida disaster bridge loan, we've really stopped talking about. That has been out of money. There is talk about trying to get the Florida legislature to refund that program, but that ran out of money very quickly. That's why you haven't heard us talking about it. That is completely empty. So it's extremely frustrating because this has gone so fast with so little guidance that people feel like I'm trying to wait to do it right, but if I wait too long, I'm going to miss the bus. So, you know, it's just do the best you can. You are submitting these applications with certifications that say this is accurate to the best of your knowledge, provided that you're not being malicious or fraudulent or, you know, Enron style cooking the books. I don't expect any penalties or anything like that as a result.
Absolutely. Next week or sometime later, we will get into more on the forgiveness of the loan. I think right now our goal was to make sure for those that haven't applied yet that you do follow these latest guidelines on pulling the right numbers for the application. And I don't even want to get into, you know, calculation of the forgiveness. And there's going to be more guidance on that too. So we'll bring that to you guys. But right now, you know, and I mentioned this before, I think the hurdle is to get these applications in. And now that the banks, the SBA is starting to review them, these questions are coming up, the guidance is coming. Let's get through this phase before we worry about how much is forgiven, how to calculate that, and so on. So I feel like we're in good spot now with this latest guidance to advise our clients and those that are not our clients. And so please, if you have other friends that are business owners or subcontractors, self-employed, that this has been a big, great area for, please share our website with them and these webinar recording, because there's a lot of articles, there's a lot of stuff out there. And, you know, if you go with our dates as the latest, I think you'll get as good of an information as possible to assist you with your application.
Perfect. That about rounds out the top of our hour. If you do have any other questions, you are welcome to email them to us. We will do our best to respond individually. We certainly will continue to incorporate those questions into our ongoing webinars. We're hoping to bring you some information next week with respect to unemployment. Once we get more guidance there, we're going to bring on one of our labor and employment attorneys to provide information with respect to that. But right now, it's not yet settled enough with respect to Florida. So for anybody who's interested, that's why we're not talking about that yet. There's just not enough guidance there. But that's next to come. Okay?
Absolutely. Wonderful.
Alrighty.
Thank you so much, guys.
Thanks for joining us. Stay well. We will see you next week.